On All About Stocks this week, a flat week for Dalal Street, but Friday's session was volatile. We'll tell you what your investment strategy should be. Infosys is the stock in focus as it kicks off the earnings season with a bang, but what should you expect from the rest of the IT sector? And our guest, G. Chokalingam, tells you why you should invest in JK Tyre and Moil for the long term. You're watching All About Stocks on ET now. Thank you for tuning in. It has been a bit of a rough month for the market so far since we entered this new year. The earnings season started this week. We'll tell you what to expect from India Inc. over the rest of this earnings season, and we'll tell you what your strategy should be with these companies as we hear those big earnings come out over the next couple of weeks. We're going to focus this week specifically on the IT sector. Our guest will also give us 2 stock recommendations that you can pick up at this point on Monday morning and add to your portfolio. We'll also answer the questions you sent in during the week. Our email ID is at the bottom of your screen if you'd like to send us any question about your stocks. Let me bring in Ajay, who's going to give us an update on how the market did this week.
Well, it was quite a volatile and on a net basis damaging week for Indian equities this time round. In fact, large caps were the ones which were leading the decline, but mid caps have started underperforming in the latter half of the week, slightly on the higher side. Clearly profit booking taking center stage this time round. So it becomes a sell on rise kind of market for traders. Every time markets go higher, fresh shorts were seen emerging. However, analysts say that this is a perfect market to accumulate good quality stocks and will remain a buy on declines kind of a market for investors who are looking at 14 to 18 months ahead as far as a portfolio construction is concerned, because the real economy is gradually improving. However, the rise of Aam Aadmi Party, and with a lot of influential names across corporate India joining Aam Aadmi Party, and indications coming of a lot of them contesting elections in the Lok Sabha polls as well, there is surely a dent which has happened as far as overall political environment is concerned, which was dominated by the Modi wave, and this uncertainty has also made a lot of market participants jittery, indicating or being open that there could be a possibility of a hung parliament also going forward and triggering profit booking as far as Dalal Street is concerned. However, if you look at another point which has been a big factor of pressure has been the fund flows, which have turned slightly negative or muted from the FII, DIIs. And finally on Friday, after looking at the first private sector bank, IndusInd, declaring the numbers, which will continue to remain under pressure as far as the asset quality is concerned, this has brought back a fear in the market that third quarter numbers may not be very strong. However, Infosys did arrest the negative momentum to a certain extent, and perhaps was the only area which have been providing support to the market. Next week, of course, RIL, ITC, a clutch of other large IT companies like TCS, Wipro, HCL Tech, Bajaj Auto and Axis Bank will be declaring the results, which the market would be watching out for very closely. This quarter, of course, is a litmus test of sorts, saying that the good quarter earning momentum which started in the second quarter, will it continue, or was it just a one quarter phenomena?
Right, big numbers to look forward to next week. Thank you, Ajay. Joining us now, G. Chokalingam, the founder of Economics Research and Advisory Private Limited. Mr. Chokalingam, thank you so much for joining us, and congratulations on the new company. Like Ajay was just telling us, it's been a rough month for the markets. January has been a rough month. There have been analysts telling us that we're possibly going to expect the market to be subdued for at least the first quarter of this year. Do you agree with that as well? Do you expect the Nifty to stay down?
Most likely, because last 2 years the FIs have been continuously bringing money, more than $40 billion cumulatively, and now since elections are due, they will definitely sit back and think in the fresh allocation. So there is a possibility of delay in their fresh allocation to India. And secondly, if you look at the macro parameters, all of us know that there is no improvement on any front, whether it is a fiscal deficit or growth or current account deficit. It might have come down, but if you look at the financing of the same, the government has resorted to withdrawal from the forex reserve. So fundamentally, things are yet to look up. What has improved is only the perception and confidence. That again depends also on the political outcome. Of course, it's a little longer, but then one has to wait and watch till February or March for the alliances with the regional parties in the 7 major states, namely UP, Bihar, Tamil Nadu, Andhra. And these 7 states account for 60% of the total Lok Sabha seats. And in these 7 states, the regional parties are more powerful than the national parties.
Right.
So in my view, till the clarity comes on these 2 fronts, one, the fresh allocation from FII, and 2, the alliances with the major regional parties by these two national parties, you need to sit on the sideline. But however, I'm very confident that many of these mid-cap stocks will continue to do.
So when you say sit on the sideline, up until our elections, are you expecting the Nifty to remain range-bound? Now, we've lost about 150 points in the last 8-odd trading sessions. So you're expecting us to stay at this level, or do you think right now we're setting up for a correction?
There could be a rally even after March. Okay. I am expecting the Nifty to be on sideline till February end or possibly mid-March, because by mid-March you will know the regional alliances, and that can give confidence to the market, and then market can start rising, assuming that one of the two national parties will come back to power.
Okay, assume I'm a brand new client who walks into your brand new company tomorrow and says, Choka, manage my money. What would you do with my money in this market? If I gave you 100 rupees, what stocks would you pick out, or which area of the market would you focus on?
It depends. Mostly I encourage only the long-term investors.
Yes.
And for long-term investors, the index doesn't matter. There always you have got a good ideas, anywhere from 8 to 12. So I would put in at least 50 to 60% of the money on day one. The remaining money, I would spread it over next 2 months. But I would confine largely to the large mid-cap and few small mid-cap stocks. And I would start buying from tomorrow itself.
Start buying from tomorrow itself. Tell us what you're expecting from the rest of the earnings season. We know that banks have had a really tough time. Power companies have had a tough time. But do you expect maybe brighter stars there from telecom, from private sector banks? Where are you expecting the stronger numbers to come from?
I think the strong numbers will come from certainly IT, followed by pharma, and then FMCG, and then also private sector banks. And that was a trend we have seen in September. So dramatically, there is not going to be change as compared to September quarterly results. So same thing would be repeated for December quarter as well.
All right. So we have to talk about the Infosys earnings that came out on Friday. In fact, we have a question from one of our viewers. Anish has written in, he has 40 shares of Infosys, which he bought at 21 and 40. He wants to know if he should hold on to that stock. Infosys stock on your screen right now. It ended the week at 35.51. Profits grew 21%. The company also very positively revised its full year guidance upwards to 11.5% to 12%. Now, the earlier target was 9 to 10%. I'm going to bring in Ajay one more time to give us a detailed report of Infy's earnings. But more so, Ajay, read between the lines of what the management was saying on Friday.
Well, amidst of a lot of cautious expectations and sentiment on the street, which was muted ahead of the Infosys numbers this time round, this was one of the quarters where even the speculative bets on how the numbers would be were quite low compared to previous quarters. Infosys actually surprised the street, came out with a decent, healthy set of numbers. But the real good news, or the potent point this time round, was the commentary from the management and Narayan Murthy himself coming out, giving very strong and constructive body language and commentary. Analysts took note of that, saying that the hints regarding pricing, regarding volume and overall environment for the Indian IT seen improving going forward bodes well for the entire sector. Also, there was a big gap between valuations of TCS and Infosys, the two large bellwether of the sector. Now that gap is also seen closing. However, analysts are not shying away by saying that if Infosys can manage such good numbers and talk so well about the sector's prospects going forward, this is one sector one has to have in the portfolio. They also don't shy away by saying that mid-caps perhaps have a better chance as far as earnings is concerned and growth is concerned. And gradually they expect that going into the new year, financial year 15, it's highly likely that the earnings estimate for this particular sector are seen being improving going forward, and hence most have a consensus overview is bullish as far as this particular sector is concerned after listening to the commentary from Infosys management this time.
All right, Ajay, thank you for that report. So, if we take what Ajay was telling us, the fact that it was a very positive management and it sounded very strong, especially Mr. Murthy, they're coming out very strong, talking about the fact that the exits were positive for them and he expects to see a very strong year. What are you expecting then from the other four big names coming out in IT for the rest of the week?
Certainly the results would be good, thanks to the depreciation of rupee. So even if you look at Infosys, the dollar term it is around 12%, the guidance, whereas in rupee term it is around 24%. So that is common trend for all the IT companies. So definitely the results would be quite impressive from rest of the IT companies as well.
Give me your pecking order for the four big names in IT right now. Which one are you most bullish on?
Tech Mahindra.
This is for the long term, Tech Mahindra,
Tech
right?
Mahindra, and followed by Wipro and then Infosys.
And then, where does TCS place on your list? Overvalued?
Definitely, it's a fantastic company, but recently you have seen the run-up. So because of the sheer relative valuation, I would put it in the fourth place.
All right, so for someone like Anish who wrote in, he's holding Infosys stock. He's making a nice profit at this point. So will a lot of our viewers who are watching right now. What's your advice? Should we be booking some profit, or do you think we should wait and watch this company is poised now to give us more?
Definitely you should hold on Infosys. I mean, my target is around 3,900 based on, the valuation. But more, on the basis of the political outcome expected. Tomorrow, if political election results are going to be very bad, I think again 2014 calendar year, people have to bank on just IT stocks because the rupee can tank. So therefore, till the you get some clarity on the elections, you should continue to hold on stock like Infosys.
All right, it's time for us to take a very quick break. But when we come back, Mr. Chokalingam has picked out 2 stocks right now that we can pick up and add to our portfolios. We'll tell you what those stocks are on the other side. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you so much for staying with us. Now, G. Chokalingam is still with us, helping us figure out our strategy for the long term. What we asked him to do is pick out 2 stocks that he believes make the most sense for us as investors at this particular time. Choka, your first stock is JK Tyres. Now, it's run up a fair amount of late. It's very close to its 52-week high. At these levels, tell us why JK Tyres.
Certainly. It would look scary if you look at the absolute price performance the last 3 months. But if you go by the valuation, in my view, there is a tremendous potential because even at current price, it is still trading at 2.9 times the earning per share. And whereas if you compare with the SEAT, which is quoting more than 5 times. Now, if you assume even 4 times multiple to JK Tyre, the stock should be worth about 240. So not only on the basis of the valuation, if you look at the replacement sales by these 3 companies, MRF, SEAT and JK Tyre, it's very robust. 3/4 of the sales are from the replacement market. And that is what helping when the entire automobile sector is going through tough time in the recent time. And third, JK Tyre has got a very successful operations in Mexico, where it has got 2 plants. And the Mexican operations account for 27% of the total sales for the company. And if you look at the return on capital employed in Mexican operation, it's much impressive. It's better than Indian operation at around 20%. And fourth, recently the promoters also increased the stake by about 5%. Now today they've got around 52%. So now there is more reason for even the promoters to align their interest with entire wealth creation for all shareholders. And considering all these facts, I strongly recommend JK Tyre. And I firmly believe that it can give 240. If you are lucky, it can even go up to 300, assuming that it can enjoy 5 PE. And lastly, the natural rubber prices have crashed. And last month they again went up because the government has increased the rubber duty from import duty on rubber from 20 rupees to 30. But again, in the last 1 week, the rubber prices have corrected by about 6,000 rupees per ton, which is a big positive for all tire companies, including JK Tyre.
All right, let's talk about your second recommendation, and this is Moil right now. We'll see that it's currently at 228 rupees. What's your target on Moil and why does it make your list?
Yeah. The Moil has underperformed the market for the last 3 years. The IPO was around 375 rupees. And today the stock is quoting around 230.
It was a huge disappointment for several investors who got in at that time.
So that itself gives you a tactical opportunity in the sense, now one side the government is, hard pressed for money, fiscal deficit is growing. And there is going to be pressure on the PSUs to give special dividend or buyback. Now Moil has got second reason to do that because all the investors who applied an IPO lost out money. So because the Moil is sitting on a cash which is 161 rupees per share, which is about 67% of the market cap, and there is no debt. And apart from that, the manganese ore is also a play on exchange rate. If exchange rate again falls, rupee value falls, the landed cost of manganese ore will increase. That is also positive for the company. Third, the steel outlook is looking up in Europe and US, which is also positive for manganese ore. Fourth, this company has recently got allocated more than 500 hectares of new mines in Maharashtra. So considering all these facts, I remain very optimistic on the particular stock.
What has changed really between now? So from the IPO to now, we saw first investors were very bullish, then slowly they lost interest. Has anything changed very drastically in the last month or so for you to be suddenly so bullish that it's going to be a multi-bagger in 3 years?
Certainly. Not 1 month, but last 6 months or so. One, the cash has gone up tremendously. In the last 6 months itself, the cash per share was 130, now it has become 161. And if you look at the divestment target of 40,000 crore, what government has got is less than 3,000 crore. Now, next to 2.5 months, the government has to pressurize all these companies to squeeze money. And apart from that, in the last few months, as I mentioned earlier, the steel industry outlook is improving.
Are you confident about the management of this company?
See, the management is not a great issue for most of the POC companies. So you can't bet on the management for making money in POC stocks. That's my view. Exceptions are there. But I would more, bet on, the prospects for the manganese ore because of the improvement in the steel sector globally.
All right. So, two recommendations there coming in from Chockalingam. One is Moil and the other one is JK Tyres. And you have to remember on this show, every time he comes back into the studio, we will pull up these stocks and see how they're doing based on his recommendation. Let's take a few more questions that have come in from our viewers. Jerome K. Richards has written in. He has 5,000 shares of HDFC Bank, which he bought at 250 rupees. He wants to know if he should hold on to that entire stock. Now, I believe he got this entire holding as ESOPs. He was an employee with the bank, and he says he's willing to hold on for another 3 to 5 years. Or should he be booking partial profits at this time? Now, HDFC Bank ended the week at 662. So he's made a fair amount of profit. But we did talk earlier about the fact that you expect private sector banks to continue to do well. And HDFC has been such a strong performer. Would you recommend he holds on to that stock?
He should certainly hold on. But if it is the only equity in his equity asset class, then partially he can sell and buy stock like ITC just to, diversify his equity asset class. Otherwise, he should hold on. Apart from the known factors, the bank recently has collected $3.7 billion through FCNR deposit. That is very positive. And second, off late, the bank is also going into smaller towns to expand in a very big way. So it may not get back to the 30% year-on-year growth, but certainly it is going to enjoy at least 25% year-on-year profit growth. And therefore, you should hold on for long term.
All right, hold on for long term. We have another question that's coming from Rohit, who has 1,400 shares of McDowell's Holdings, which he bought at 44 rupees. Should he hold on to that stock? He's a little disappointed with what the stock has done. It currently ended the week at 32.5 rupees. What's your recommendation on that stock?
Yeah, many people like us, we go wrong when you choose the holding company, when there is no underlying business in the company. The theme will play out only when there is a unlocking potential or unlocking really happens. Now, in this case, I would still suggest him to hold on.
Okay.
Because the whole, UB group is going through tough time. And this company has a stake in United Breweries Limited, which is worth about 830 crore, whereas the market cap is, hardly about 40 crore. And the United Breweries Limited whole market cap is around 20,000 crore. So tomorrow, the management of United Breweries Group decides to, unlock money and come out of this current crisis of debt, then there is a huge potential. And here in this particular...
He might wait for a very long time before that happens, though.
No, it need not be in this particular case because, India is a very tough time now. Growth is a 10-year low. But if you look at the liquor business, it is recession-proof, it is inflation-proof.
Right.
So, and this is into, beer business. And already the foreign partner has got 39% stake in the company, more than what the UB group has got. And we have already seen the consolidation happening in the, the liquor and, brewery businesses. So there is a possibility also. The company, the Scottish and Newcastle, which has got 39% stake, tomorrow it might decide to increase, to take complete control also. In that case, it can be a multi-bagger.
It's time for us to take another very quick break. But if this particular conversation has made you want to review your portfolio, when you come back, we're going to review Chockalingam's own portfolio. He's picked out stocks. We're going to compare that with the Nifty and the Sensex and see how he's done so far. Don't go anywhere. Welcome back. You're watching All About Stocks in ET now. G. Chockalingam is still with us, helping us make money in the long term. It's time for us to look at Chockalingam's own portfolio. Now, it's currently at an overall gain of 19%. Compare that to the Nifty from the 8th of August when this portfolio was put together. The Nifty is up about 10%. So you're beating the Nifty by 9% there. I'm going to go over the stocks that he's picked out for us. There's ITC, NMDC, RIL, Bosch, Oracle, Clariant Chemicals, City Union Bank, CMC, Karur Vaishya Bank, Tata Coffee, Balmolori, JB Chemicals, Surya Roshni, JK Tyres, Glaxo Consumer, Now, it has given us a return of 19%, but would you like to make any changes right now? There's a large list of stocks on that portfolio.
Certainly. I would like to book profit in CMC. It has run up a lot. It has given about 44% gain and replaced with the Infosys. In fact, in industry, everybody is negative or neutral, most people, but I am bullish on it.
Okay. Why is that?
In the last 6 months, there has been upgrade in the valuation of IT companies, at least anywhere from 300 basis to 500, whereas this stock has not participated.
Okay.
So I firmly believe that. And secondly, that digital risk acquisition has done very well. And third, even after the acquisition, they are still sitting on 1,000 crore cash. And there is a possibility of even buyback to increase the promoter stake from 60 to 65 level. So considering all these facts, I am quite bullish and I believe it can give around 515 rupee return.
Okay. Is that the only change? Would you like to make any change?
Second change is I want to book profit in JB Chemical.
Okay.
It has given 72% gain. And I think it's a great company, but it is ahead of the fundamentals. So I would sell and buy Moil, which we covered earlier.
Which we recommended, yes.
Third, Surya Roshni, it has given 19%. I would go for Tilak Nagar Industry. Again, it's into liquor business. And it has corrected from 93 rupees to current around 56 level. And as I said, even something goes wrong with the economy, nothing will go wrong with the liquor business.
If we talk about the liquor business, now this is not a company that readily comes to mind. It's a smaller company. This is not normally the names that we come across. Tell us why you've picked it out instead of maybe one of the other liquor companies that we talked about earlier on the show.
Certainly. It's a very low profile company based in Maharashtra. But if you look back for last 8 years, it has created enormous wealth for the shareholders. Tremendous multi-bagger. And going forward also, it can create a consistent wealth creation. As I said, the liquor business is a very consistent growth story in this country. And this company has got very popular brands in the liquor. And third, they've got a good share of market in Maharashtra, which is supposed to be the fastest growing market for liquor. So considering all this and also the management capability, I believe the stock can go back to the 52-week high of around 90. That itself can give you very good upside.
All right, very good upside there. And among the rest of the list that we have from your stocks right now, if one of our viewers watching at home wanted to pick up one of them and add them to their portfolio, which one would you recommend at these levels? I
would still recommend a stock like ITC, Bosch. In fact, it ran up to 11,500 and now again corrected in the last 10-15 days. And in mid-cap space, I would recommend Clariant, Karur Vysya Bank, City Union Bank, because in this quarter, I expect the RBI to give a banking license. And I firmly believe that L&T Finance has a fair chance of getting that license. And that should be taken positive for City Union Bank because L&T Finance has 5% stake in City Union Bank. So these are the names I would definitely. And more on JK Tyre. Though it has run up, still I'm very optimistic.
You're very optimistic. All right, I'm going to give you a recap of the stocks in Chokalingam's portfolio. There's ITC, NMDC, RIL, Bosch, Oracle, Clariant Chemicals, City Union Bank, Infosys, Karur Vysya Bank, Tata Coffee, Barmer Lorry, Moil, Tilak Nagar Industries, JK Tyre and Glaxo Consumer. Of course, 10% of that portfolio still remains in cash as we had placed it. Now, that's a wrap on this show. Remember, you can send in any questions. If they're specifically for Chokalingam, we will bring him into the studio and have him answer your questions for you. Thank you so much for spending time with us on this weekend and giving us your advice. You'll find a copy of the show on our Facebook page and you can reach me personally on Twitter. Thanks for watching.